Carol, welcome to the 10 o'clock hour of Squawk on the Street.
Well, it's great to be here, Morgan. Thanks for inviting me.
So I want to start with that reaffirmed full-year guidance. It's getting a lot of attention on Wall Street today, especially after your chief rival, FedEx, pulled its forecast last month and warned of deteriorating macro conditions. What gives you the confidence to reaffirm that outlook?
Well, I'm so proud of our over 500,000 UPSers around the world who are truly moving our world forward by delivering what matters. We had a terrific third quarter, and as we head into the fourth quarter, well, it started off strong. So we were very comfortable in reaffirming guidance today.
Okay. From your vantage point, the fact that you are moving so many goods around the globe on a daily basis, is a worldwide recession, as FedEx's CEO discussed a couple weeks ago, do you see that on the horizon?
Well, clearly the global economy has softened up from the beginning of the year. The beginning of the year, global economies were growing around 4%. That's come into a little over 2%. So things are softer, and there are parts of the world that are really challenged, like rolling COVID lockdowns in China. But we're not going to be a victim to that. Actually, we're going to lean into the segments of the market that really value our end-to-end network, provide excellent service, and grow through this environment.
And I definitely want to dig into that a little bit more. In terms of the U.S. specifically, though, when I see revenue per piece in the U.S. domestic unit, which is very e-commerce dependent, it rose to almost 10% last quarter, even as we did see some demand softening. Can that pricing resiliency continue, and what's the read-through to the consumer?
So value is defined by what the customer is willing to pay for, and what our customers are willing to pay for is excellent service. We have leading on-time performance against all of our competitors. And as we head into peak, volumes are going to peak up and service really matters. For the past 4 peaks, our service has outperformed everybody else in the industry. So customers are willing to pay for that.
So how does this speak to your bigger, not better strategy? I mean, you've had this shift from volume growth to a focus on better profitability of the packages you are moving through your network. What does that enable in terms of more control of the costs in that network?
Well, as we are leaning into the segments that really value our end-to-end network, we see improvements in our revenue quality. And one of those segments is small and medium-sized businesses, where we've seen significant growth, now making up nearly 30% of our business. We will continue to lean into that customer segment because that customer segment is actually growing. And we're providing not just great service, but we are simplifying the way this customer deals with us. We have 16 customer journeys to ensure that the experience with us is seamless and frictionless, and we're making good progress against those journeys.
So how does that continue to build out? And I ask because I realize Amazon's still a major source of revenue for UPS, 11% according to a recent JP Morgan note. But analysts there are also noting that you're moving away from carrying as many of those Amazon packages on your network. I mean, we did see FedEx basically rip the Band-Aid off there in terms of its volumes with Amazon a couple of years ago. The fact that you're doing this gradual, it seems, downshift, at least according to analysts there, walk me through that process and what that means in terms of that additional capacity going to higher margin customers in the future.
So we have a great relationship with Amazon. They are our largest customer, but we contractually agreed on the packages that we would deliver for them and the packages that they would deliver for themselves. And what that enables us to do is to glide them down a bit. They're still going to be a very important customer to us, and free up capacity for other customers. That's all part of better, not bigger.